I'm Ross Gallagher, Ventures Director at 11FS, and this is Fintech Insider News. This week, we're talking about fintech funding because, according to some new research by CB Insights, global funding is at a 7-year low. However, equity funding is actually on the rise, so we discuss why this is happening and what it could mean for fintech in future. We're also discussing Nubank. One of the top banks in Brazil is partnering with Wise. The bank, which is growing in Colombia and also recently launched in Mexico, currently has 90 million customers in South America. This new partnership will unlock a bunch of new services for their premium customers. And the Commercial Bank of Ethiopia recently named and shamed some customers after they took advantage of a technical glitch. Would you expect your bank to out you in public for something? And have you ever publicly called out a company on their mistakes? We discuss all of this and much more on today's show, so don't go anywhere. Hello and welcome to episode 845 of Fintech Insider. I'm Ross Gallagher, Ventures Director at 11FS, and I'm joined this week on Fintech Insider News by three guests who are here to break down the biggest stories from the past week in fintech and financial services. Firstly, I am really delighted to be joined by my wonderful co-host, Jamie Campbell, Head of VC here at 11FS. Jamie, the last time we heard you on the podcast was after dark, I believe. What was that like?
Yeah, it was pretty amazing. It was very busy. Lots of very excitable fintech people in the room, and and a lot of bagels, which I ate quite a few of. This is slightly different. There's an audience of zero and no bagels, and I did request them. So, but no, I'm really excited to be here. Thanks.
I can attest that the bagels were sensational, as were the panelists, Jamie, of course, and I'm glad that you're back and looking forward to getting through the show with you. Veronica, there's a bit of a After Dark theme, isn't there? Veronica Glab, Head of Partnerships, Investment Lead at Innovate Finance. The last time I believe we recorded together was also an After Dark, the After Dark before Jamie's After Dark. So great to have you back. How have you been?
Oh, thank you. I've been great. And I was actually at that After Dark where there were said bagels, and I can attest they were fantastic. Look, I'm doing great. And as head of partnerships and investment at Innovate Finance, I run our annual investment report, which tracks all VC fintech activity around the world. And I use that report to run some of our programs to connect fintechs with VCs and strategic investors. I also have a deep vested interest in supporting fintechs on their scaling journey between the UK and burgeoning fintech markets like East Coast US, Middle East, or Southern Europe.
Love that, Veronica. Thank you so much for joining us and coming on to share your insights. And finally, another big FinTech Insider return for Chris Skinner, best-selling author and CEO of The Finanser. Chris, listen, welcome back. Great to have you. Maybe you can just remind our listeners a little bit about you and what you do.
It's been a while, Ross, and nice to see Jamie and Veronica. And for those who don't know, I write every day at thefinanser.com, a blog about where the world is today. Most of the detail this week has been around the debate over the use of customer data. Next week, and Veronica forgot to mention it, I'm going to be at Innovate Finance Global Summit, which is going to be part of FinTech Week in London, which is going to be an amazing week. I'll be there all week, launching my brand new book, Intelligent Money, when moneythinksforyou.com. So you guys need to check it out. But it's great to be back. And by the way, I met a person recently who opened a Chinese cookie that said that they'd won a bagel, and they thought it was a recreational vehicle. Anyway, that's another story.
That's superb. Look, Chris, as ever, it's really great to have you. So thanks so much again for jumping in. So look, I suppose without any further delay, let's jump straight into the news. Our first story this week comes from Finextra with a headline, Fintech funding is at a 7-year low. Now, according to new research by CB Insights, investment in fintechs declined by 16% in the first quarter of this year. The $7.3 billion raised by startups in the last 3 months is the lowest since early 2017. It is also massively down on the $16 billion raised in the same period last year. and $32 billion 2 years ago. The largest deal of the quarter was Monzo's $430 million, led by Google's parent company Alphabet. However, it's not all doom and gloom. The report also showed a 15% increase in equity deal making during Q1. Veronica, it seems fitting to maybe come to you first on this one. What's your sort of read on this? What was your reaction when you read this story?
Yeah, I mean, to some extent, I'm not surprised. A lot of VCs have been saying that they were taking a very cautiously optimistic approach to 2024. And in this case, it's very cautious. But, I did actually look at some of the data that I run in my own research. And I noticed that if we're looking at the data quarter by quarter, a funky thing happened in 2023 where Q1 we saw about 22 billion USD invested into fintech, which then dropped very sharply to about 10 billion in Q2 and 10 billion in Q3 before rallying a little bit to 12-ish in Q4. So it's not that steep of a drop from the last quarter, but it is reflective of an interesting pattern, because that same pattern with a very boom Q1 and then flat 3 following quarters also happened in 2022. So it is interesting. But what I'm also more interested in looking at is, are we looking at average deal size, or are we looking also at what verticals are getting funded? And what is most interesting to me is country by country and region by region.
I think the deal count is really interesting, because deal count versus last quarter is up, but the amount raised is down, signaling that there are people still doing deals, but it's harder for founders to get that money. Selling the same amount of equity that they would have, in years gone past. They're having to give up more of their business early on in order to get that funding. And then when you look at where the drops are, it is in that early stage of fundraising where there seems to be the difference. And I think looking across at the I guess the sub verticals of the fintech investment space, previously we saw a lot of excitement and buzz around buy now pay later segments, and knowing that there are moves from the regulator trying to button down some of these unregulated parts of the fintech market is probably making investment into some quite hot areas or historically hot areas feel a little bit cooler. And I think that's where we're seeing the decline. But I was interested in digging into this data a little bit more, and I was quite shocked really, because going back to Q1 2022, there was 13,000 deals done in that quarter, and we're at 6,000 deals this quarter. So kind of almost halved, over that period, which is quite eye-opening.
Yeah, I mean, from my side, I think we're seeing a typical cycle, which is the cycle that we went through at the end of the 1990s, early 2000s, with the dot-com bubble bust. And the issue is basically investability and trust and sustainable business models. There's an awful lot of fintechs that are actually been doing really well in the last couple of years, like Bunk from the Netherlands, 11 million European users in the last 9 years. Revolut just reached 40 million users, and Monzo did a funding round, $430 million with 9 million users in Britain, which, to put that in context, NatWest, who many of us know as a big bank, has 14 million customers. So they're growing so quickly, they're almost as big as NatWest. And Revolut added 10 million users in just 9 months, which is quite incredible. So there's lots of successes out there. And I think a lot of that's to do with sustainable, maturing fintech business models. The problem is that the new kids on the block are struggling to find private equity, seed funding rounds. Having said that, there's a lot of new investors out there. I've got some friends who, for example, created the Archie Group. Anthony Thompson, who is founder of Metro Bank, Atom Bank 86400, is a co-founder of that fund. And so there is money out there. I think it's just proving that you've got a better idea. And that's where people have trouble. And if you go back to the dot-com cycle, some of the biggest failures were those that had, a malformed idea or a embryo idea that they couldn't implement. One of the best examples was pets.com, for example, which was meant to be delivering pet food to the home, and burned $147 million in the first few months of the year 2000 and went bust. And there's many other examples you could point at. So it's really saying, who are the survivors? And the ones I've mentioned, I think, will be survivors. And again, going back to the dot-com bust, Amazon hit the headlines of Business Week in 2002, asking if they would be dead by the end of the year because they thought they would fail. Well, we all know what happened to that one. So I trust my instincts when I look at the ones I've mentioned.
Yeah, and I think what you mentioned there is something that we're also seeing at 11FS more broadly, which is that we're in a kind of a consolidation phase of, where a lot of interest, especially with, and you mentioned the Monzo figures, when financial services businesses that are akin, to a Monzo, that have similar regulatory permissions or, a similar user base are seeing that kind of, valuation. People are getting excited about acquiring businesses, that are a little bit more later stage, and taking them off the market than going and raising more rounds of funding, to progress in that way. But I think, going back to the data, I think one of the things that made me feel quite confident is that 2 of the top 5 deals this quarter were in the UK. So, I think, although there is a cooling in the fintech space and I guess in the startup investment landscape in general, the UK still seems to be pulling some good deals for
The UK is
for
a very
fintech.
resilient market.
On that area, Jamie and Veronica, I'd be interested in your view on this. Your hallowed leader, Mr. Breer, did write on LinkedIn that London's dead meat. It's gone off the rails. Any view?
I didn't see that. I didn't see that.
Yeah, I
I'd
think
love to
that-
see. I don't have our hallowed CEO's LinkedIn posts on notification. So I must have.
The gist of it is that the reason why London succeeded is obviously government commitments, the community, and the investments, market capability in our area. But now Hong Kong, Dubai, Singapore, other markets are offering great incentives to go elsewhere. So how does London?
I think that is that. You are right that the competition for fintech founders to land and grow businesses is a lot stronger now.
But it's also an opportunity for collaboration. I think also what we have to look at is some of these markets like the UAE or Saudi or Singapore, they're on a very different journey with digital transformation. Look at India, for instance, which was a very cash-dependent society until there was effectively a government order to say, hey, we need to be cashless. We need to make financial transactions and banking services more accessible to our population. A similar thing is happening in Saudi Arabia. And that's where a lot of those government mandates have come from, is from that deep consumer need. Whereas if you look at the UK and the US, and these are very actually mature B2B markets, that's where I think the opportunity for collaboration is actually. So it's not inherently competitive. Although some of these places do have much better weather than London.
Yeah, and I think that's the critical point, which is that although fintech investments may be going down, I still think in a European context, London, UK, we shouldn't be sort of London-centric. It's UK, because Fintech Wales, for example, I'm seeing a lot in the headlines at the moment, growing their capability with Starling Bank and others. And German fintech's just struggling immensely. I've seen some interesting figures this week showing that they've seen a massive downturn, as has many countries of Europe. So I think it's just a scaling back from the VCP private equity community. And the critical thing is if you're in a Series F or thereabouts funding round, then you're a mature fintech that's got a proven model. If you're in a seed funding round, you can probably find angels and others who will help you. I think it's the ones in the middle that are in the doldrums and are finding it the most difficult. And it's not saying that they've got it wrong. It's just saying the funding round belief system is being questioned.
But I think that maturity point is such an interesting one, right? Because it's really easy to read particularly the headline, but the story and kind of come away with almost like a negative interpretation of where we're at, right? But the Monzo example, is such a good one, right? That we have seen consolidation, that free flowing investment capital has dried up, but we have seen a move towards more sustainable business models, as you said, and companies that can stand on their own 2 feet, right? So this isn't necessarily a bad news story, and I think Monzo is a great example to sort of illustrate that, right?
And as well, if it's worth just remembering that some of the previous years have seen just huge, phenomenal late stage investment rounds that have kind of buoyed a lot of the data. I mean, Stripe's raise last year, was it $6.5 billion, and Checkout and Klarna raised in the same year in 21. Those two combined was roughly $2 billion. So there's, there have been big deals, that have, made previous years look great when you add it all, when you add them all together. But yeah, I think it's, we do know that there is a kind of a decline in startup investing since 2021, certainly. And yeah, I think hopefully, as Veronica says, the return to VC investing across fintech will be optimistic, but cautious at the same time.
Yeah, exactly. I mean, look, there's a few other elements there. Some of the companies that have failed or will fail are those that also have not anticipated consumer or market needs. Some of them could have done very well from hiring a macroeconomist to anticipate that consumer spending would start falling in 2022. But that's the thing, is we have to look at the whole picture here. And we're also only discussing venture activity now. I know anecdotally of startups that have raised their early rounds from family offices or angels, because they do just find that to be a more efficient route when they do need that funding to start delivering on a product that will, potentially beat out any competitors and allow them to scale and have that first mover advantage in their vertical. And we're also not looking at M&A activity. Companies like you mentioned, like Stripe, they're massive acquirers of some of their competition. There's all kinds of exits happening. And even last week, we had massive news about Nubank. And even yesterday, Onfido announced that they've also been acquired by a US company. So venture activity is not the entire picture. It's always really exciting, and I think that's kind of why we're in it, right? But it's not the full picture. There's a lot of cool things happening in the space that point to further maturation and ongoing enthusiasm from all sorts of stakeholders.
And just in context from the backdrop, you have to remember the macro picture, which is the Ukraine-Russia conflict, the Hamas Palestinian-Israeli conflict, the rising interest rates because of uncertainty, the lending markets in particular being heavily hit. So, the peer-to-peer lenders are sort of not seeing the returns that they've ever seen before because of that. There's a whole raft of things in there, but you both mentioned Stripe, and because I'm a nerdy nerd, Stripe was $95 billion value in 2020. And then it dropped to $50 billion in 2023, and now it's back up at $65 billion, and it's anticipated to be the biggest IPO of this year. So there are great news stories out there, but the ones we're talking about tend to be those that have proven their spurs, like Klarna, Abrdn, and others. It's not the new kids on the block.
No, that is a good point, because it speaks to, I guess, resilience in the market when you consider it in that sort of macro picture. And also, Veronica, I think you're exactly right that we're focusing very much on VC, but actually there's lots of other success stories within that as well. So nice to sort of sound a note of optimism on that one as well. All right, our next story comes from FF News with a headline: Nubank teams up with Wise Platform. Wise continues to build partnerships with institutions around the world, and their latest is with Nubank. One of Brazil's largest banks, Nubank boasts 85 million customers in that country alone, with a further 5 million around South America. The new partnership will power Nubank's new global account and international debit cards for their premium customers. This will empower customers to hold money in both US dollars and euros and spend in local currencies across 200 territories worldwide. Wise have only launched in Brazil 15 months ago, and in that time have issued more than 1 million Wise cards. We were able to speak exclusively to DMR Ferrer Garcia, a senior business development manager for LATAM at Wise, who told us this.
On your question on why this partnership and the growth and expansion of Wise Platform in this case, this partnership is a testament of Wise Platform power and growth opportunities at the moment. Nubank, being one of the largest digital banks with over 90 million consumers and a tremendous valuation, it just shows yet another partner choosing Wise, as Monzo did before, or Stringham Bank or Bank Mandiri. This partnership just marks yet another milestone on the Wise's expansion. The Brazilian region on itself has been doing really well over the past years with the first launch of the remittances and then also adding other features to offer into the market. It has shown a consistent consumer acquisition and growth. So the next natural step as part of the Wise offering was to also enable Wise Platform. Nubank will be the first partner in the region where we'll be collaborating together. For this partnership specifically, we are going to be offering a fairly new product offering as part of the Wise Platform offering umbrella, which is going to be multi-currency accounts and the issuing of the international cards. In this case, Nubank Ultravioleta consumers will have access to holding Euro and USD, as well as spending as a local in more than 200 countries and over 40 currencies. This very much aligns with the Wise's values of fast payment, convenience, and low cost, as well as the mission of making international payments as easy as possible.
Chris, keen to bring you in first on this one. I mean, Nubank and Wise, like two fintech success stories, real behemoths. I mean, this sounds like a really exciting partnership.
Absolutely. I mean, I had the vision some years ago that eventually many of the companies that are innovators in fintech would collaborate, partner, and create global platforms that would integrate and provide service. And this is a good example of two companies that are starting to do that. I don't know how many people use Wise, but being in Poland, which is where I live, or doing a lot of business in UK where I still have a home, I use it all the time. And the main reason being is the FX rates are fantastic and the fees are brilliantly low, unlike my traditional bank account. And they've given me 3 different bank accounts. I have an American, UK, and Polish bank account with Wise, with IBANs and BICs, the codes that are needed for international transfers at very, real-time speeds and really easy. It's almost like fiat currency for the world versus Bitcoin, which is not fiat currency, it's crypto. And I think this is a really interesting strategic move because Nubank's amazing. They started around 2015, now nearing 100 million users across South America, expanded from Brazil into Mexico and Argentina and other countries. And the biggest thing about what they achieved, because I was in Brazil quite a lot in the early 2010s, is that no one could break into that market because it was like a mafioso between the banks and government. And Nubank started just by attacking one little piece, which is the cost of credit cards in Brazil, which is massively expensive for the average person, and equally was therefore a barrier for people to get entry into electronic payments. And so they introduced credit cards, debit cards at much lower cost using technology, and it took off so quickly and was so successful that the Brazilian government said, "Oh, you're doing really well, we'll give you a banking license." And now look where they are. They IPO'd, what was it, 2 years ago at $95 billion valuation, I think. They're one of my favorite examples of a successful fintech in the world, and I think Nubank and Wise is going to be an incredible partnership.
I completely agree. You mentioned, Chris, their IPO in 2021, and absolutely so impressive. But I think what's even more impressive is how they've continued on that sort of growth trajectory since then. They've quadrupled their revenue. They surpassed $2 billion in the last quarter of 2023, which is just sensational. And it feels kind of out of context when you look at some of the numbers.
I love the quote from their COO. I'll probably get the quote wrong, but it was something like, "Banks are the Darth Vader of credit cards and we're Luke Skywalker."
Yeah, it is. And I mean, Jamie, look, I suppose it speaks to how you can sort of, I suppose, the potential for disrupting what was, you know, quite I suppose a market that was ripe for disruption, but with all those barriers to entry. But I mean, really actually just nailing down a solution to a real customer problem, and the impact that that can have.
Yeah, and I think kind of demonstrating that you can be an expert in a particular vertical and find incredible success, around the world. I think I read a lot about, and I've recently seen a lot of decks where the pitches of companies are, we're going to do this first product and then we're going to be a super app, and we're going to bring all of these services together. And I think one of the things that I've always admired about Wise is that they've known their vertical, the problems with their specific niche in financial services so well. And they've known how their company can play an extremely important role in making it better, faster, cheaper. Whether it was pre-card transfer Wise, and then the post-card Wise, as Chris said, giving you, multi-currency accounts and allowing you to operate incredibly seamlessly in lots of different jurisdictions. I think I think Wise for me is always been a great example of a fintech that has just kind of constantly delivered it within that vertical. And we looking at this and seeing how both companies are able to kind of win from this deal, where Wise gets into the Brazilian market in an incredibly deep way, and Nubank being able to start making moves into more northern parts of America, I think is an interesting deal for so many reasons.
Yeah, and I don't want to overtalk everyone, but the big thing you have to remember is, like, there are many Brazilians across the world. So I was living in Whitechapel at one point a few years ago, and our local church, Catholic Church, was a Brazilian Catholic church. There are huge communities around the world. So when we talk about remittances and moving money between communities, this is a really good move.
I completely agree. And Veronica, back to your point in the previous story about sort of the impact and the potential for partnerships. I mean, this feels like an interesting one and one to keep an eye on, right?
Oh, absolutely. I mean, this is what you get when you see a company is actually mission and values driven. And the incredible thing is, here you have two of them. They've both been incredibly successful in their own right, and together they could absolutely multiply that impact.
It's just like the beginnings of like a fintech supergroup. Is there like a pop? Is
this like an Avengers thing?
It's like it's like the first film in a franchise of fintech assembly. Maybe we should.
There's got to be some sort of comic book reference for this. It's like Batman versus Superman, but actually good.
Well, when you take this further, if it's fintech infinity, what's the end game?
Goodness.
Who's the big bad?
I don't know.
But actually, that sort of point about like being mission aligned, and actually that kind of like Avengers analogy is really interesting, right? Because we've seen others that are actually scaling back, right? That includes like N26, right? They've pulled out of Brazil. Like, that kind of demonstrates that this is a hard market to crack if you're not mission aligned and if you're not doing it properly. And of course, like big incumbents like HSBC are selling off more of theirs. So it does raise the question around like specifically what are Nubank doing so right? And Chris, I think you alluded to it a little bit already in your earlier explanation. But as I say, I mean, some of their numbers, when you look at like, I mean, we're saying that N26 have pulled out of Brazil, but I think Nubank have already gained like a million customers in Mexico within its first month.
The big thing about Nubank, a bit like WeBank in China, is they're not trying to compete in the traditional banking demographics and markets. They're trying to reach the people that the traditional banks didn't reach, particularly the blue-collar workers, the unbanked, the underbanked, the migrant workers. And when you look at the Nubank growth developments, it's not really replacing the traditional banks as such. It's more creating new markets and providing new services that are far less expensive than the traditional banks could offer because of the technology. And that's really made them into this behemoth that I think will become a global fintech bank over time. but potentially collaborating with others. It doesn't mean that they have to be Nubank in Europe. They might team up with an N26 or a Monzo. You never know one day. But I can see those partnerships developing into these, as Veronica said, Avenger-style companies that provide platforms globally in partnership that's seamless in real time.
Yeah, I think in answer to your question, Ross, what's Nubank doing that's so right, and not to be a massive, dropper of 11FS equities and assets, but within Pulse, we do have Nubank as a business that we've audited and indexed in terms of their product. So that is a great resource for finding this kind of information. If you are curious as to, if you are in the UK or Europe and you've not even seen it, there is a resource out there that you can. I feel really bad doing this sell. This wasn't meant to be a sell. This was just meant to be like a.
No, it's it is.
Yeah,
it's
since
it
joining
is a good point.
Since joining 11FS, it's been one of the things that I've been very impressed with, and so it is there for people to check out.
Aside from being a shameless plug, Jamie, it is also a very valid answer to the question, what are they doing so right? Well, come and see for yourself. 11fs.com/pulse. On that note, we're just going to take a quick pause here and we'll be back with you very shortly. All right, welcome back to the show. Before we get back into the second half of the news, a note to go check out our most recent Fintech Insider Insight show. In this very special episode, 11FS CEO David Abrdn sits down for an exclusive interview with Monzo's CEO T.S. Anil. The pair discuss Monzo's recent investment, their global ambition to transform banking, and why the incumbent banks should feel challenged by what Monzo is building. Plus, they chat about TS's own career path and what led him to take the helm at one of the biggest challenger banks in the UK, if not the world. So do go check that out in your podcast feed. It's the one just below this. So let's get back into the news. Now, this headline comes from CNN with a headline, AI, or AL if you misread it, could be as consequential to the economy as electricity, says Jamie Dimon. This was in his annual shareholder letter. So the JPMorgan Chase boss talked about the potential of Gen AI, saying, and I quote, "We are completely convinced the consequences that will be extraordinary and possibly as transformational as the printing press, the steam engine, electricity, computing, and the internet." Dimon also spoke of the impact AI could have across the entire business and workforce. JPMorgan now includes more than 2,000 AI and machine learning experts, and the bank recently announced a new position for a chief data and analytics officer. Dimon, as we know, has never been shy of voicing his opinions, and last year proclaimed Bitcoin a, quote, hyped up fraud. Chris, let's start with you again on this one. I mean, AI has obviously been a major trend, a major buzzword for some time, but what do you think about these statements from Mr. Dimon?
Well, the main thing about Jamie Dimon is he does get technology. I mean, he's very committed to being a tech-led bank. And it's not saying that they're a bank with a technology license. He knows that they're a bank with a banking license, but that can be made far more effective and efficient through technology. I think it's interesting. They have 2,000 engineers and AI machine learning developers within the bank. Because the first headline I saw was about 2019 was when they started using artificial intelligence to do contracts for commercial clients. And they had a headline that said in 1 second, their AI engine can analyze contracts that historically would have taken 360,000 human hours to analyze. So 1,500 lawyers versus 1 second on an AI engine. That was radical. And this is not something new. I mean, we were doing paired trading, neural networking in the city in the 1990s, leading to algorithmic trading in the 2000s, and then flash trading markets in the 2010s. But what I think is interesting today is it's developing so quickly. And we know that from ChatGPT, and it's almost that you're irrelevant as a CEO if you don't mention AI today, because you have to be doing something in that space. So the question is, Did he mention it because it would help boost the share price, or are they truly doing something innovative and committed? I think it's the latter. I would like to believe it's the latter, particularly as this, they're saying that they have 400 use cases that are in production in areas covering fraud and risk, which you would expect, but also marketing. And my favorite example of the use of AI in finance is actually Alipay, who I always talk about with Alibaba in China, because they've been doing this for a long time as well. And the reason why I raise that is when I went to visit Alipay, and this was in 2017, so 7 years ago, they had a real-time map of China and every payment taking place in a green, amber, or red visualization. And obviously red is fraudulent. And their fraud is about 0.64 cents for every $10 million that goes through the system. Work out the numbers. That's tiny. And that's because they integrated artificial intelligence for fraud 7 years ago. Where they are now, I don't know, because I haven't been down there lately, but I'm sure I will be soon. But I would say if you're looking at where leadership in AI is going to come from, it probably won't come from the States or Europe. It will come from China.
I was reading the when I was reading a little bit of this shareholder, I didn't read all of it. They are long. They are. It's longer than I thought it was going to be when I kind of opened it up. Not on my usual reading list, but what I think stood out to me was, the mention of AI and, the applications that they're looking into, and and how important it is, going forward, was in the section just above, I guess, their continuing efforts to move to cloud-based databases for their bank. So I thought it was a real visual representation of the challenge of incumbent banks needing to stay relevant with really cutting edge technology and far-reaching applications across the different parts of the business, while still having incredibly complex relationships with on-prem technology. I thought it was just an incredibly good visualization of that challenge.
I think it could be really interesting, actually, because a lot of the incumbent banks, they do have challenges with adopting new technologies. Some of them have trouble developing their own fintech products, but some of the advantages that they have is they've got the ear of the regulator in the US, already a very fragmented market. They by far have the best lobbying resources for starters, but they do also have a lot of legacy data from their own consumers. I mean, if we look at some of the regulated banks in the UK, some of them have been around for several hundred years. So that nuance and richness of data that they have access to, paired with the right technology, whether that is something that is acquired or developed in-house, that could be really interesting. And then when it comes to, sort of unleashing that, if you will, on the market, then the voice that they have to the regulator, now that's interesting. And that will pose a challenge for fintech challengers as well.
Or an opportunity.
Or an opportunity, exactly.
If you're leading, if you have the ear of the regulator, as you say, and you are pushing hard on AI initiatives, then, someone has to blaze that trail and get and the regulator has to learn alongside them with, with these new technologies, what the implications might be on the market, how would it help serve customers and protect customers. I think in the UK, my previous companies, we were going through the Innovate sandbox with the FCA. Really that initiative was about learning how technology in particular, but also, how novel takes on financial services can, lead to new business models and what that potential impact is on customers. And I think someone has to do that educating. And if it is going to be, a large bank who has strong ambitions in AI, who can help the regulators, whether it's in the US or the UK, understand the impacts of these technologies, I think that's probably a good thing.
Just out of interest, Veronica, and sorry to put you on the spot, but what's the buzz within Innovate Finance around AI? And is it just a buzz, or is there any substance?
I think there is substance to it. I mean, you're also talking to the person on the team who loves philosophizing around AI. The transformational potential of it really is, it really could be quite impactful. Certainly, it's in the investment community, it's sort of the new trendy item. And I think what's going to happen is you're going to see a lot of investment into early stage AI companies, sometimes perhaps without the proper due diligence to check that they are actually offering a product that's innovative enough. As something happened in fintech, you saw a lot of tourist capital come into the early stage VC space. A lot of that is leaving as the sector matures. So I think it'll be similar with AI. The difference here is that level of computing power, how it can make individual people more efficient in their day jobs, how it could potentially really enhance fraud detection, KYC, consumer protection. I think that's really exciting, actually.
I think there's some of the language that that Jamie used in his message was really interesting, and language we've actually used here at 11FS around augmenting individuals, not replacing individuals with AI. And I think that's, when you compare that to, I think it was Klarna last year saying that their AI assistant is handling 2/3 of customer service chats, with the first month that it launched it. It's a very different take on, the applications of the same technology.
It is. I mean, Jamie Dimon, he's strong opinions strongly held. He's also the same guy who said that we all have to go back to the office, and here he is saying that AI will bring us down to a 3.5-day work week. So I would love his recommendations for what I should do with my long weekends. He also had some interesting things to say about Bitcoin.
Well, I also find it quite interesting because there's a lot of confusion about AI, and that obviously there's a cost reduction and a customer enhancement aspect and an employee augmentation service. But Bank recently sent me a press release, and Bank is the big bank in Europe, based in the Netherlands, saying that they're the first AI-powered bank in Europe or the world. And then I looked at what they were saying that they could do, which is you could ask their app, what's the average amount I spend on groceries every month, or how much did I spend on Amazon? What was the Indian place I went to with a friend in London? And I'm going, but isn't that PFM?
I think actually that raises a really interesting point, because Chris, I think you illustrated with some staggering numbers earlier on about, where we're seeing some real uplifts from where AI is being applied, and particularly I think on the back end is incredible. I would question the immediacy with which we're going to see real value, and the customer service example, Jamie, is really interesting. But I know Comply Advantage released a report a month or so ago where they had done a really extensive review of consumers' attitudes to AI in financial services, and actually there's still a huge amount of reluctance and hesitancy there, even actually when it comes to using AI to counter AI-based fraud threats in people's accounts. People just do not understand it. And Veronica, to draw your point out about the funding, there was 29 billion invested by venture capitalists into generative AI startups last year. That was up from 8 billion in 2022. The boss of Amazon Cloud likened the hype to the dot-com bubble. Your point about due diligence, I think absolutely holds. And I think as well, all right, we talked about ChatGPT, super interesting. We're seeing a lot there, but then you look at others like Stability AI, valued at $1 billion in 2021, raised $80 million last year. Now only is $4 million left in the bank. Its CEO has stepped aside. So it feels like from that perspective, actually, this industry is still fairly nascent. So I think, yes, I'm excited about the potential for the technology, but it feels like there's still a very, very long way to go in terms of actually this becoming super mainstream. Is that fair to say?
Yeah, I think to some extent, yes, because we're also seeing, as we see sector maturation with, better tech stacks, different investment at different stages, it's also a maturation of executive behavior. There's a certain, in the recession that we are currently in, or the macro landscape, there is a certain level of cynicism around, fintech and other tech verticals as well. So, you're going to see a new generation of CEOs that operate in a very different way, and that really approach their mission with a certain level of maturity. Those are going to be the ones that succeed. To give another fintech example, after the fall of FTX, you saw a very strong uptick in seriousness from other good actors in the crypto and digital asset space, because they really had to win back the trust of a lot of their stakeholders. So something like what's happening with Stability AI, or the recent kerfuffles in Open AI as well, that's going to demand a lot of maturity from the executives themselves within those companies. And then from investors, you're going to have to do your due diligence and say, this company that I'm about to invest in, do they actually have a good tech stack? Do they have a good, innovative, forward-looking product? Or is this a product developed on a recycled GPT model? Let's have a discerning eye.
I was interested in the statement actually of from Jamie saying that it's going to be as transformational as electricity. So and I think wherever there's a lot of data, there's a lot of interesting applications for AI. And so it kind of sent me on a bit of a weird, down a rabbit hole, trying to find the strangest AI examples that I could find. And there were a couple of things around refrigerators and AI driven bird feeders. Should you be a birder? And I came across two which I thought were interesting. I'm going to move quickly past the AI massage chair, which I'd tagged, but an AI belt was one that I'd found, and an AI driven dog bowl. So he is, if it's permeating these different areas, then he may be correct. It's worth mentioning the AI belt also has cameras in it.
Do go on.
This is actually quite cool.
Jamie,
and if
I've actually messaged our producer to get permission to run over on this story so we can do like full scale product descriptions.
Okay, well let's get into it, because I think this. I'll start with the dog bowl, because I think I have a dog, and anyone who has a dog, maybe they can understand this. So this is an AI driven dog bowl which pairs with a collar that your dog wears. It counts the amount of steps and the activity of your dog, and then when it comes up to its bowl at the right time, the bowl and collar chat to each other, and the bowl issues the correct amount of food based on the amount of calories that the dog has burned off in that.
You'll never convince me that that's not the future.
No, that is going to be used by people. That is absolutely going to be used by anyone who does intermittent fasting.
I mean, I'm going to be wearing that belt for my daily portions. Okay.
Well, no, that's not the belt. That's the dog. That's the dog collar. The belt is slightly interesting. The belt is very different. The belt. Now, I think it's. When I read AI-driven belt, I did have a little bit of a giggle, because it just seems so absurd. But this is actually quite interesting. The belt has 2 wide-angle lenses mounted on the front. And I know you're not thinking fashion statement, but what it does is it constantly views in front of you up to 17 feet, and it scans, and it has haptic feedback. And if you're about to walk into something, if something is close to you, if it gets, if it moves closer to you, it has haptic feedback so that you don't walk into something. So for people who are visually impaired, it's a really interesting product, but certainly not a fashion statement. But
so what you're saying now is that if I've got the AI belt and I'm visually impaired, I don't need my dog, so therefore it doesn't need the collar.
Well, that's exactly what I was thinking. Is you're going to have a lot of guide dogs that are now not getting their daily steps in.
All the guide dogs are made
so
redundant.
The coupling of the products
what will
is
dogs
great.
do?
You're really developing an industry here.
So yeah, AI is changing the employed sector, and people are going to have to look for other jobs, as will guide dogs, is what we're saying.
I do actually really appreciate those as like good examples of where AI is being applied to solving real customer
problems.
So
thanks for entertaining my
thank you for that. That is all I can say. All right, I'm going to move us on to our next one, which comes from TechCrunch, with a headline: a new US quote green bank program aims to steer billions of capital into climate tech. On Thursday, the Environmental Protection Agency, or EPA, announced $20 billion of grants to 8 green bank organizations who will use the money to underwrite green initiatives. These initiatives will be focused on smaller projects that make tangible differences to people's lives, such as installing heat pumps in homes or retrofitting affordable housing. Green banks, as defined by the EPA, are, quote, public, quasi-public, or non-profit financing entities that leverage public and private capital to pursue goals for clean energy projects that reduce emissions. The new funding was made possible from the US's new Inflation Reduction Act, which makes tons of provisions to support climate tech. The EPA has also pledged $14 billion of this pot to tribal communities, rural communities, and low-income and disadvantaged communities. Jamie, how about we come to you first on this? I mean, on the face of it, all sounds pretty positive.
Yeah, and I think the rising trend of fintech, leading into green tech, is everywhere. In the UK, we've seen a number of examples. I know, my previous company working with, a carbon tracker based on your spend. We've seen examples like that, in different countries. But I think what's interesting here is, how policy can enable innovation in these sectors. And I think, I personally would like to see more of it.
Yeah, I think it could be quite interesting because if you actually manage to scale this, and what's interesting about that deployment of those $20 billion is it's specifically going to disadvantaged communities, including indigenous communities who are disproportionately the ones most affected by some of these issues. So, having a real societal impact, I think that's fantastic, just point blank, to direct that funding towards the communities who often get overlooked. If you actually manage to scale that is, I think, where there's an interesting opportunity for mission-driven businesses to continue supporting that through the provision of green loans, through the measurement of impact. That's where you can have, if you successfully scale it, an impact on greenhouse gas emissions and effectively reducing that, but also making, basic utilities more accessible and affordable. If you measure that correctly, then that's when you actually start to really, really de-risk some of these loans, some of the green loans. It's very, very attractive opportunity.
Complete claptrap rubbish. I mean, this is a drop in the ocean, guys.
It is.
American banks dominate the funding landscape for fossil fuel investing, and they account for more than a quarter of all the fossil fuel financing in the world. JPMorgan has held the top spot for that for 6 years. Just last year, taken over by Royal Bank of Canada. JPMorgan gave out $40 billion in fossil fuel financing last year. And since the Paris Agreement came into effect in 2016, JPMorgan has been the largest single financier of fossil fuels, putting in $434 billion. So when you say $20 billion, it's a drop in the ocean. Literally, it's going to disappear. It means diddly squat.
Oh, look, 1,000%, right? Like, I'm excited about what that $20 billion means actually for individual families and homes that will be affected, right?
Yeah, I mean, it would be good if it can make a difference. But I'm more worried about the fact that Citi, Wells Fargo, Bank of America, JPMorgan Chase, have actually put $5.5 trillion along with other big banks since the Paris Accord of 2015 into fossil fuel funding. And that's what has to change. I'm sorry, but I'm passionate about it because it's my last book, Digital for Good, before this one. I've been quite in tune with Extinction Rebellion, who everyone hates. And I don't hate them. I think you need to understand them and their motivations. And the big thing about what they say is if you went back 100 years and looked at, the surrogate, rise to get women the vote, then that's what they feel they're doing, which is it's active protest, but it's not causing damage. It's causing attention. And I really think we need to put attention into the space. But when I see $20 billion, it sounds fantastic. But in the context of $5.5 trillion since the Paris Accord, it's nothing.
I fully agree with you there. As I said, it's a great community initiative, but in terms of making a macro difference, even on a policy level, this is, let's be honest, where the Biden administration is trying to get reelected, and the name they've put behind it as the Inflation Reduction Act it's a drop in the water in terms of even handling inflation. And then if we really want to talk about making a positive impact on the environment, well, Jesus, we're far from it.
So what the green community are demanding, and forget about just Stop Oil, Extinction Rebellion. Let's put that to one side. Whatever you feel about that, but what that community is demanding is just stop new investments in fossil fuel projects. Very simple. So allow what's already out there to continue, but take off the table anything new. And the problem we have is that it makes a lot of money. 14% of European banks' profits come from funding fossil fuel projects. So we need to limit that and change the mentality. And you only do that through active investors and active consumers, which they're rising. And, by the end of this decade, I'd be very surprised if we'll see the banks continue to behave the way they do.
One more time for that book title, Chris, so I can learn more about this, because it's fascinating. It's good to hear. Actually, it's great to hear you talk quite passionately about this. So yeah, let's chat afterwards.
I want my children to have a future.
Yeah, I'm such a big fan, Chris, of actually, the story isn't the story, right? This isn't about 20 billion. And actually, let's talk about the bigger issue here, which, as you said, is the 5.5 trillion. Veronica, I also completely agree with you that if there is some good that comes out of this, it's hopefully redressing some of those disproportionate issues for some of those disadvantaged and minority communities that you mentioned.
It is worth saying that it is worth saying, in my role here at 11FS, I have been exposed to some really interesting conversations around, large institutions who are interested in co-investing in more ESG stuff, which they're just not coming across in their day-to-day business, or they want help to understand how they can get involved in a material and impactful way. So we are seeing it, and I do hear from you, Chris, that in the grand scheme of things, these figures are small, but I think trying to put a more positive spin on it, it's nice that there are trends of these things becoming more popular, and it's nice that 20 billion is not the only figures that we're seeing. Is that who people putting money into these spaces.
I think where I'm coming from is that if the EPA, rather than putting 20 billion in, could work with the SEC and the Fed to say, JPMorgan, Wells, Citi, Bank of America, you must stop funding fossil fuels, particularly new fossil fuels. That would make the difference. I don't want to see the end of funding, because I live in Poland, and Anna Botan, the executive chair of Santander, made a really good point on Bloomberg a few years ago, is that you can't tell Poland to switch off coal, because then the country would come to a standstill. But what you can say is don't create new coal mining plants and factories and services. So it's a transition to renewables and carbon energy. And that's what has to be encouraged. And that needs to be legislated, not just a discussion.
Yeah, I fully agree, because no company's going to do something that's inconvenient to them and their shareholders.
It's one I think we could genuinely talk about for hours. It's such an interesting topic. Our next Insights show, actually, my colleague Rachel Pandian is joined by some great guests to discuss ESG in banking. So that's one to keep an ear out, especially if you've enjoyed this conversation. If you're listening in the future, it'll be the episode directly above this one in your feed. I don't know quite how time travel works yet, but I think we'll get there. All right, now for a quick look at some more click-worthy news this week. Jamie, I think you're running through the first one of these for us. What have you got?
Oh, am I actually running through this? Oh, excellent.
Yes, sir.
This is Abrdn, or Abrdn. Abrdn, yes. It seems so weird when you see it written down. When you say it, obviously Abrdn, it's fine. But when you see it written down, it just feels so wrong. Well, apparently, people are mocking Abrdn and saying that mocking their new name, new as of 2021, amounts to corporate bullying, says its chief investment officer. I looked into this, and I was. It's an interesting one, because I guess in 2021, when I went back and looked at their statement as to why they were doing it, they wanted to say that it reflects the heritage, but also this modern and dynamic approach that they have, and it kind of made me think of the difficulties of forcing reappraisals of brands before doing anything that demonstrates that that you are a modern, forward-looking business, and how that can feel, really, it can rub up against people. But yeah, it's a very strange one. It's one that they've created the situation themselves. And yeah,
I do think their CIO taking it personally is a little bit weird. But okay, it's a weird story. All right, our next one comes from Sifted with a headline: Revolut, Checkout.com and Starling are among UK tech companies with wider gender pay gaps than the national average. So this new research, as reported in Sifted, shows that the gender pay gap at 15 of the 20 best funded UK tech companies is wider than the national average. This is based on data from the government's latest gender pay gap filings, and it seems some of these companies, including Checkout.com, actually saw their gender pay gap widen in the last year. This does not mean that these companies are paying men and women differently for the same job, although it does mean that there could be a lack of women in the highest paid or most senior roles. For her reaction on this, here is fellow Fintech Insider host Rachel Pandian.
While tech and finance are traditionally male-dominated industries, the fact that the most well-funded, high-growth startups are actually seeing a declining representation of women in higher-paid roles is a concerning trend that merits attention. And it's not the only place that we're seeing these sort of stats. A study earlier in the year by Ravio shows that the picture significantly changes in terms of representation when it comes to the later stage a startup is. For example, in the growth stage fintechs, we're seeing a 25% average gender pay gap. But at the later stage fintechs, we see a 37% average gender pay gap. Now, this could be attributed to the focus on more engineering technology roles as companies are striving for scale and expansion. And it's no surprise to anyone that in spite of all the work that's been put into increasing the pipeline for women in technology roles, there's still a long way to go to reach the parity that we're seeking. However, how long can we buy that excuse? It's been a while now. We know what the issues are, and we need to take some action. Talking about DEI is one thing, but quite honestly, it's a waste of money and it's a waste of time. Better still is action. Companies with leadership that demonstrate diversity through either lived experience or learned experience out-innovate and outperform. In a study by Harvard Business Review, it showed that employees at these companies are 45% likelier to report that their firm's market share grew over the previous year and 70% likelier to report that the firm captured a new market. Let's be clear that these stats that Sifted have reported on do not paint the whole picture, and these companies have made incredible headway in other ways, showcasing amazing, diverse leadership at times too. But these stats are indicative of a pattern, and they form the basis of a call to action. It's important as we grow and mature as a fintech ecosystem that we address some of these core issues in order to become a leading and competitive space. Finally, let's also be clear that these stats only talk about the binary gender pay gap, and we'd probably need a whole other podcast to factor in intersectionality.
All right, now it's time for the and finally section of the show, a look at something more offbeat from the world of finance. This one comes from the BBC News with a headline: Commercial Bank of Ethiopia names and shames customers over bank glitch money. So last month, a technical glitch at the bank meant customers noticed a bump in their account balances, which they were able to transfer or withdraw. Some customers took full advantage of this, using their newfound funds to make purchases such as smartphone or internet packages. Most of the money was withdrawn by university students and has reportedly cost CBE £12 million. However, in a bold move, the bank is now publicly naming and shaming those who have not returned the money by brandishing their faces, names, and bank account numbers on huge posters outside their branches. The bank claims they are, quote, forced to release the individuals' identities after giving several warnings and extending deadlines for returning the money. Veronica, your reaction to that was quite something. What are your thoughts?
Just my wordless. I just think that's so awful. It's quite. I think it's a bit embarrassing for the Central Bank of Ethiopia. Really,
it's so good. I love the idea that they said that they sent multiple warnings. I'd love to just have a look at the gradual escalation of each of those warnings. Right, look, we know you've got some of our cash. Right, just give it back. Next one. No, seriously, give it back. Third email. Okay, guys, we're going to show a picture of you to everyone. it is amazing. I mean, I think the unintended potential consequence of this is, because it's when I was at school, getting into trouble was almost like street cred. So they could have this unintended consequence of posting these lists of
You've just
of
raised
people,
a
and they're
new
like,
generation and a nation of
exactly
badass fintech fraudsters.
Yeah. I got free money from the central bank.
Yeah. But in all seriousness, though, I think that's actually going to hurt the bank's credibility, really. It's just another reason for consumers to turn to fintech. I think it is actually poor form.
Yeah, it is. It is pretty poor. It actually reminds me of a story that I heard, which may not be true, and I'm not sure if I should share it. But I think it was in Asia, and it was a credit product where you essentially had to submit some sort of collateral, which was an embarrassing photo.
That's Scientology level.
I was going to share that story, Jamie, because it's actually.
Is it true? Is that true? Is it true?
Yeah, it's true. It's a peer-to-peer lending company in China called JPMorgan, where when you took out a loan, you had to send a photograph of yourself naked to the lender.
What?
And if you didn't pay back the loan, they would share that with your friends, family, and everyone online. And the difference, obviously, is in Ethiopia, the bank made the mistake and gave all the money away. But in this case, take out a loan and show your dick, get a dick pic or whatever. Yeah, whatever.
Oh, my God.
Blimey.
Well, if it isn't the consequences of their own actions.
Oh, God. We should print T-shirts with that, Chris, for next week when you're walking around Innovate Finance Global Summit. For your book signing.
Thanks, Jamie.
not to bring everything back to AI, but I think this is part of my skepticism, right? About it's almost like social media. Like social media promised this great world of everybody just being connected, and I think we're all talking about AI again in the same sort of utopian terms. But my problem is humanity and ultimately what it's going to be trained on. And I can see a future where you've got these sort of utopian-esque companion apps, AI powered, that can solve for loneliness and all that sort of stuff. But what's ultimately going to happen is, because of human and human nature and the data set it'll ultimately be trained on, it'll just become completely sexualized and inappropriate. I think that's the bit that's where I really fall down.
It's really funny, Ross, because I had this debate at a recent conference, which is, in the future, the role of humans is to train and maintain the machines. And then someone said, but the human's more important than the machine. Debate.
Oh, we could talk about that all day.
Yeah, tell me.
It feels like a good cliffhanger on which to end. So I shall wrap us up. And that is it for this week's Fintech Insider News. Guys, thank you so much. That was honestly such a great discussion. Let's go around the virtual room. You can tell us where people can find out a little bit more about you. Jamie, why don't we start with you?
Yeah, you can head to LinkedIn, Jamie Campbell 11FS. You can also head to 11fs.com/VC. If you are a fintech business interested in getting funding, you can submit some pitch decks there. And if you're at Innovate, I'm gonna warm up your plug for IFGS. If you are at Innovate Finance Global Summit next week, Monday, Tuesday. On Tuesday, I am hosting, or judging rather, in the Pitch 360 event. So if you are in town, please reach out. Would love to see you.
Yeah. So this was
Jamie
actually
Campbell
inception on my
king of the
part.
Plugs.
Yeah, as this is inception. I wasn't going to advertise my own event. I had every other person on this podcast do it for me.
We're just big fans.
Thank you. But look, you can find me either at IFGS next week, probably running around quite a lot.
Wait, when does the podcast go out? On Monday?
Yeah, that's the question.
Monday.
Yeah, so
So if you're listening to this podcast on Monday, 15th of April, there will still be time to get tickets at the door, where you can see me and Jamie. We're very nice in person.
And Chris.
Indeed. He's coming in from Poland, from my hometown in Warsaw, actually. Anyway, you can find me online as well at Veronica Maria Glab at LinkedIn. And that's where you can find my unhinged thoughts on AI and fintech investment.
And from my side, you can find me everywhere, but the main place is The Finanser, SER.com. And that's where I blog every day. Also on LinkedIn, X, and various other places, including CaptainCake.com, where I have my children's books.
Hang on. Are we going to have a new segment of the podcast where we talk about your children's books?
Well, Captain Cake, to sweetly go where no sweet's gone before.
I love that. Well, Jamie, I'm sorry, Chris has just topped all of your plugs. Honestly, though, guys, thank you again for such a fun show. As for me, you can find me on LinkedIn, Ross Gallagher, 11FS. And thank you for listening. Please do join the conversation on social media or email podcast@11fs.com. Thank you very much and goodbye.